Petrol, food, clothing prices, basically everything that we consume is becoming expensive day by day. How will medical prices not rise then? Reports state that medical inflation in India is now at 15% per annum compared to 6 to 7% overall inflation per year. Now, given such a scenario, you cannot ignore buying a life and health insurance plan. COVID times also taught us that you cannot predict when an unfortunate event can hit us, as many of our loved ones got infected by COVID. Therefore, when you get your first salary, should you prioritize insurance portfolio over other investments? Now, to discuss this, we have Amit Chhabra, head of health insurance policy bazaar.com, and Mahavir Chopra, founder beshak.org. Welcome to the show. Amit, let me start with you. In fact, let's start with life insurance. I think, Mahavir, tell me one thing. The first step of financial planning is often said to be covering yourself against all kinds of risks, especially financial risk and financial liabilities. Can a life insurance policy would be the right investment when you decide to start on your journey with an investment portfolio? Are you on mute? I think you're on mute. Mahavir, yeah.
Are you able to hear me?
Yeah, now I can.
I said, from our point of view, the way we look at it, the way term insurance should be looked at is something which has to be personalized for each user, right? There could be people who start early and basically start earning, and they could have financial dependence. And because they have financial dependence, they would basically need a term insurance in their life so that they basically take care of their financial dependence. But in case there are no financial dependents, that probably a term insurance is something that could be something that a customer could wait for before they have financial dependence and then buy it. So our view is, look at your life and look at your own needs and then basically look at covers, right? Don't go by any thumb rules. Look at that, from your first salary you should buy insurance, or from your first salary you should buy mutual funds. You should look at your life. You should look at what are the needs that you have in your life, and then based on that you should probably talk to a couple of experts and then take decisions. So there could be a scenario where there could be a customer or an individual who has family members, who has parents, or who's not married and has parents who are well to do, right? They don't have any financial dependence on the child, and then term insurance probably may not be that much required. But let's say if there is an individual who is young but now has started taking care of his family and is paying bills, right, every day, taking care of his family, then term insurance would be required. So that's how we would look at it. I would basically look at it from a person to person basis, and then based on needs you should discuss and decide what you should buy.
All right. Yeah. So, Amit, overall, when you talk about life insurance, it's like a financial security that you provide to your beloveds after you. But then health insurance, looking at the inflation, the prices have gone up for any sort of medical treatment. What kind of a health insurance policy one should be opting immediately after having a cover of life insurance?
So, see, I think what is important in health insurance, firstly, is to understand what is the sum insured that you're buying. That's the single most important feature of any health insurance policy, and it is fairly simple. So let's say if you're a family of 2 or 3, you have a child, you have a wife or a husband, then in that case what you're looking at is basically coverage which covers you or all of you in case you get hospitalized. In COVID, what we saw was the entire families were getting hospitalized as well, right? So there, the rule of thumb is you should look at least 10 lakhs per person of sum insured. So if you are a family of 3, you should look at least 30 lakhs sum insured. That's point one. The second thing that you must look at is what kind of health insurance you're buying. So one should try to buy a plan which has no limitations mostly, which means you can go to at least a single private room in any hospital of your choice. There is no co-payment, which means that you don't have to pay anything from your pocket, and everything is paid by the insurance company. And there are no sublimits. Like, for example, some plans have sublimits on cataract or knee replacement or certain types of illnesses. You would not want that. So you would ideally want a plan where everything gets taken care of by the insurance company. And there are obviously more technicalities as well, but to keep it simple, I think these are 3 things that one must look at when you are looking to buy your health insurance policy. And just to add, I think one more important point, because a lot of people do make that mistake when they're buying initially in their life, when they're buying the first health insurance policy, you must look that the policy that you're buying has lifelong renewability, because there are a lot of other options available as well. There are a lot of group policies available which may not have lifelong renewability. So you may be able to buy that policy today. It may be cheap, but that policy may not be with you, 10 years, 20 years down the line when you may need it. So again, it's important to understand that you buy a policy which is renewable lifelong till you are alive or your family is alive. These are probably the 4 important things to look at when you're buying your first health insurance policy.
You both guys are not financial planners, I'm aware of that, but then still I want to put up this question. What, according to you guys, why do you think insurance product or insurance investment is important before you go for any financial investment instrument purely? Mahavir, first you.
Right. So basically, for a person who is a classic individual who has dependents, he needs to first basically protect what he has before he goes and looks for growth in his wealth and his the money that he is basically managing. Right. So from that perspective, every customer is typically recommended that he first looks at having an emergency fund, which is basically somewhere around 3 to 6 months of his expenses, and then immediately have a health insurance and a term life insurance policy, which will basically take care of all the kind of expenses or eventualities that typically could actually hit on his savings and his plan, right? So from that specific purpose, typically these are the things that when a person is just started earning, and if he is having dependents, like I said earlier, then these are the 2 policies that typically get recommended. And then as the life progresses, then the kind of covers that you take and the kind of review that you do with your policies obviously will change.
Amit, according to you, how much of an health insurance is actually enough?
See, assuming you meant the quantum. So as I said earlier, I think one should look at least 10 lakhs of coverage per person. So if I am an individual staying in a tier 1 city, then I should have at least 10 lakhs coverage. If I am a family of 4, I should look at least 40 lakhs of family floater kind of coverage, so that in case some or all of the members need a hospitalization, the sum insured is enough. The good thing in this is, as you move beyond 10 lakhs sum insured, the incremental cost per lakh is very, very less. So basically between 10 lakhs and 1 crore sum insured, which is 10 times high sum insured, the cost to the customer is only going to be about 15 to 20% extra premium. So it's very, very affordable and easy for a customer to upgrade from a 10 lakh to a 1 crore sum insured. So that's the number that one should aspire for when you're looking to buy your health insurance plan.
Which usually people that's one area that's slightly complicated for people to upgrade. But then Mahavir, when you talk about life insurance policies, there are a lot of forms of life insurance policy that a lot of people also have a combination of insurance and investment plan, which they also call as a pure life insurance policy, which is where they go wrong. When it comes to pure life insurance, we usually discuss buying a term insurance plan, but within that also you have a lot of feature packed policies being offered these days by insurance companies. Now tell me, will a vanilla or a simple term plan be enough to start off your investment journey?
Yeah, of course. Meaning, from a point of view of you taking care of your financial dependence, you need to have a term life insurance policy, which is the most efficient way to basically give financial security to your family. So there is no other product which can give effective financial security to your family other than term insurance, specifically to do with early death. That's the event that you're trying to cover. From a perspective of basically other products which are which are blended products where there is a investment and insurance that is basically blended together, those products should ideally be looked as investment and not security. They should be looked at typically from a point of view that they're actually an investment avenue, and they're probably giving you like an insurance which is bundled along with that investment product, and hence not look at it as financial security, but look at it from a particular lens, which is basically to understand how you can grow your money and how you can beat inflation, and then compare with other avenues, other investment options, instruments that are available in the market. So both solve for different problems, and hence you should both these products should be looked at differently. For term insurance, ideally there is no substitute, so you cannot look for any other product. It's the most effective, most efficient product that will solve for financial security, specifically related to early death. For the investment products where there is a blend of insurance and investment, there are obviously a lot of other options, and you should talk to a financial advisor before you take a decision.
Okay, okay. All right. So I have a lot of questions to actually ask both of you, but unfortunately we are done with the time over here. But thank you so much, gentlemen, for being on the show and helping our viewers take the first step towards financial freedom, which is by having the right kind of insurance. Thank you so much, Amit. Thank you so much, Mahavir.